It's never too early to start planning your business sale. The sooner you start planning, you get to, one, spend more time increasing the value of your business and increasing the attractiveness of your business to buyers. And two, you get to spend more time focusing on tax planning and tax minimization strategies. So the first step to your exit plan is really deciding how you're going to exit your business. Is it going to be having one of your kids come in and take over the business? Are you going to sell to one of your employees? Or are you going to sell to the open market? It is important to note through the SBA loan program, your key employee could buy your business with zero down. So a lot of business owners usually have a great number two that is the natural fit to take over their business, but then they sell to someone else because they think that number two doesn't have enough money to buy the business. I want to let you know that that's not the case. Through the SBA program, they can do it with 0% down. So as long as they have halfway decent credit, and if you know that they're great at running your business, look to your number two as your best buyer. And what's great about that SBA program is that any buyer can also get the cash or working capital they need to run the business. So again, if your business requires a lot of cash just to run the day-to-day, and you're worried about that number two not having that cash, they can get that through the SBA process. Now, if you're getting ready to sell your business to the open market, you want to show the market that your business is not reliant on you to operate. So if you're a few years out from your sale, then you can really start delegating some of the things that you're doing to other people on your team to make your business less dependent on you. You can also start handing off sales relationships to other people on your team. You can implement marketing strategies so that you can have sales and marketing not as dependent on you bringing in new business. So all of these should increase the value of your company because then you can scale yourself. Instead of you being the only salesperson for your company, you could split that amongst a couple salespeople, and you're going to be the best salesperson for your company, but you're not going to be as good as three people. So you can have those three people. Neither one is going to be as good as you as an individual, but as a whole, maybe they'll be better. It's also the time to go and start cleaning up your financial records. Typically banks and buyers, they're going to look at the last 3 years of records. So if you can show squeaky clean books for the last 3 years, it doesn't matter what you did before, that buyers are really going to increase their value for your business because they can really believe the numbers. A lot of small businesses, the accounting's just a total mess, so you never really know if it's making what they say they're making. So those types of strategies, they not only increase the profitability of your business, which increases the value of your business, but they also increase the attractiveness of your business. So that increases the multiple which buyers are going to apply to your business. On the tax side, there are lots of strategies you can do pre-sale that can help save taxes. There are things like F reorganizations that can move taxable income from ordinary to capital gains taxes, which can really greatly reduce your tax rate. If you have an estate tax problem, there are strategies you can do to move some assets out of your estate before the business valuation gets marked up that can help reduce that estate tax problem. These are all things you need to do before the sale. There really aren't many tax strategies that help after you've already sold your business or even after you've accepted an offer for your business. Most need to be done pre-offer. So if you think you're within 3 years of wanting to sell your business, click on the link in our bio and we can start helping build a plan to maximize the value of your business and try to minimize the taxes that you're going to pay on your business sale.